Our next guest has a lot to say about financial regulation. He's the co-author with Simon Johnson of 13 Bankers, the Wall Street Takeover, and the Next Financial Meltdown. You just heard our Brian Weiss talking a lot about what's going on with the regulatory debate. We're joined now by James Kwak. James, first of all, obviously there's a lot of debate going back and forth as we try and reconcile these two versions. The talk really on Wall Street and in Washington a couple of months ago was that the legislation might be quite favorable to Wall Street. Now it's not necessarily looking that way. Once reconciliation's all said and done, how do you think this is going to look?
Well, I think that, certainly a couple of months ago, some people thought we might not have a financial reform bill at all because, as you know, the Republicans have 41 seats in the Senate and can potentially block anything. What we saw over the past couple of months was there was a big shift in popular opinion, largely against Wall Street, and that had a couple of sources. I think one factor was certainly the SEC's lawsuit against Goldman Sachs. Another, I think, was the fact that there was just, more consciousness of the high profits on Wall Street and the high bonuses that the bankers were paying themselves. So we ended up getting a bill out of the Senate that I think was considerably stronger than most people would have bet on 2 months ago. That said, I'd say it's still a moderate bill. I think it's still a bill that essentially tries to improve the way that Washington regulates Wall Street instead of a bill that makes any fundamental changes in the financial sector. And I do think that over the next month and a half, it's going to get, if anything, it's going to get weaker and not stronger in conference committee.
Well, James, speaking of that, Barney Frank talking about the derivatives amendment as part of the bill, which would require financial institutions to spin off their derivatives operations. He says really the Volcker rule would preclude the need for this derivatives rule. Do you think he's right? I mean, if you're saying a bank can't do prop trading, doesn't that sort of achieve the same end?
On paper, it should. I think that Congressman Frank I think he's wrong on this issue, however, and the reason is this. The Volcker rule is in the Senate bill in a very weak form, and it's not in the House bill at all. As you recall, the Volcker bill was announced by the White House in January after the House bill was passed. It was slipped into the Senate bill, and there were two versions of it in the Senate bill. The version that's in the Senate bill authorizes the Senate. It sets some limits, and it says banks have to divest their operations in a certain amount of time. But at the same time, it commissions a study to investigate what should happen, and based on that study, the Senate can choose to undo the Volcker rule.
James, could I ask, because you mentioned just a moment ago that you said that the bill leaves some fundamental problems unsolved. One of the problems a lot of lawmakers say is that there's nothing in this legislation that addresses the problems of Fannie and Freddie. Is that something that is now a third rail of politics? Is it going to get addressed at all after the November elections? When?
Okay, so I do think that it does need to be addressed. I think that Fannie and Freddie, although, as I've said in other contexts, I don't think they were the sole cause of the financial crisis. They are a clear example of the problem of too big to fail. So agencies that were essentially backed by the U.S. and took on much too much debt and are now costing us hundreds of billions of dollars. I think that the Democrats certainly do not want to touch that issue before November. I am hopeful that it will be addressed next year. I think there should be a lot of reason for bipartisan support for reform of Fannie and Freddie. I mean, frankly, there was bipartisan support for the way Fannie and Freddie used to operate because both administrations wanted Fannie and Freddie out there, cheapening the cost of debt for homeowners and getting more people into houses. And I think it's quite clear what the challenges have been with Fannie and Freddie. But you're right, it is an issue that people don't want to touch in an election year.
James, just getting back to the legislation generally, whether you're looking at derivatives or some of these other measures that might not make it into a final bill, you talked about the public anger here. Why isn't Congress now harnessing that more, and the White House for that matter, harnessing that more going forward? Is there still too much Wall Street involvement in Washington?
Well, I definitely think there is. I mean, there are two different calculations going on. On the one hand, congressmen have to be reelected, so they care about what their constituents think. And Congress does, in some form, follow the will of the people. So I think that's why the bill got stronger in the last couple of months. At the same time, Congress people certainly take large amounts of money from Wall Street. They have become one of the dominant sources of campaign funding on both sides of the aisle. And they're very cognizant of that. And so I think that, to some extent, congressmen want to be able to, well, they're trying not to get caught out voting against the people so that they can, so that they don't have votes on the record that their opponents can hammer them with in November. But at the same time, they don't want to alienate Wall Street too much.
I think tread the fine line.
Exactly.
All right. James, unfortunately, we're out of time. Hope to talk to you again soon. James Kwak, co-author of 13 Bankers with Simon Johnson.